All right, let's talk about Central Pacific Financial, ticker CPF. They just dropped a Q4 earnings report for 2025 that really got Wall Street buzzing. So today, we're going to break it all down. We'll look at why they beat, what it means, and what we can expect going forward.
So here's the game plan. We'll start with the headline numbers, the big beat. Then we'll get into the how, the margin story. After that, we'll look forward with their guidance and capital return plans. We'll check the market reaction, and then, of course, we'll give you our final call on the stock. Let's jump in.
Okay, first things first, the headline numbers. And let me tell you, this was a clear outperformance.
So what's the big number everyone's talking about? It's this one, 12 cents. That's how much CPF beat analyst earnings estimates by. They posted 85 cents per share when the street was only looking for 73. I mean, a beat is a beat, but a 12-cent beat? That really gets people's attention.
And when you look at the whole picture, that outperformance is everywhere. I mean, look at this. Core EPS, up 24% year over year. Revenue jumped over 30%. And get this, net income more than doubled. These aren't just good numbers, they're fantastic numbers. It shows the company is really firing on all cylinders.
Okay, so a beat like that doesn't just happen, right? You have to ask, how did they do it? And for a bank, the answer almost always comes down to one thing, the margins.
And here it is, 3.56%. That's their net interest margin, or NIM. It grew by 7 basis points just in one quarter. Now that might sound small, but in the banking world, a 7-bip expansion in a quarter is a huge deal. It's the engine of their profitability, and it's getting stronger.
Just a quick refresher for anyone who needs it. Think of NIM as a bank's fundamental profit metric. It's basically the difference between the interest they make on loans they give out and the interest they have to pay on deposits. The wider that spread, the more money they make. Simple as that.
So how did they get that NIM to expand? Well, check this out. They got cheaper money. Their average cost for deposits actually fell by 8 basis points in Q4. Think about that. In this environment, they're paying less for the money they used to make loans. That's just smart management. And hey, don't just take my word for it. The CFO, Dana Matsumoto, said it herself on the earnings call. She pointed out that they successfully dropped their deposit costs while the yield on their loans barely budged. That right there is the secret sauce for a wider margin.
Okay, a great quarter is, well, it's great. But what investors really care about is what's next. So let's look at the signals management is sending for 2026.
And the outlook looks pretty solid. Management is guiding for another 4 to 6% growth in net interest income. They also think margins will keep expanding, maybe a bit slower, but still heading in the right direction. This tells us they don't see Q4 as a fluke. They see it as sustainable momentum. But wait, there's more. And this is a big one. $55 million. That's the size of the new share buyback program the board just authorized. When a company decides to buy back that much of its own stock, it's screaming one thing. We think our shares are cheap, and we're putting our money where our mouth is.
And this buyback isn't happening in a vacuum. It's all part of their plan to reward shareholders. They just raised the dividend. They bought back a ton of stock last year. And they're doing all this while keeping their capital ratios, their financial cushion, super strong. It's the whole package.
So the company laid out its case. Strong quarter, solid guidance. Now let's read the tape. How did the market actually react to all this good news?
You know, the Q&A part of an earnings call is always revealing, and the analysts were definitely digging in. They wanted to know about some loans that got delayed, how fast the company was going to use that new buyback authorization, and if they could really keep deposit costs low with all the competition out there. They were basically stress testing the good news. And the market's reaction was interesting. The stock took off right at the open, hitting a high of almost 35 bucks. But then it kind of lost steam throughout the day and closed lower. It's what we call a fade. It tells you that while investors were impressed, maybe they weren't quite ready to go all in just yet. But let's zoom out for a second. Even with that daily fade, you have to look at the bigger trend. Over the last year, CP&GF is up almost 15%. The regional bank ETF, it's up less than half that. So context is everything. They're clearly outperforming their peers.
Okay, we've broken down the quarter, we've looked at the guidance, we've read the market's reaction. Now it's time for our call. What do we think happens next?
So what's the final verdict on CPF? Here's how we see it playing out. We're forecasting next quarter's EPS to tick up just a bit to 86 cents, thanks to that continued margin control.
We're setting our price target at $35, basically saying we think it'll retest those highs. And given the strong fundamentals and shareholder-friendly moves, our official rating is outperform.
And as always, please remember, this is not financial advice.